maybe they have other niche interests. There's a lot of people who are like really big cryptocurrency fans, for example, who have, they love Andrew Yang, and when I talk to them, they're like, yeah, ask him about crypto. What would you do with regards to regulation of that and say Bitcoin exchanges? Do you support the right of people to use their bank accounts, credit cards, et cetera, to move into cryptocurrencies and other forms of money that aren't as easily tracked by centralized authorities?
Well, what I would say is that we need to have a uniform set of rules and regulations around cryptocurrency use nationwide, because right now we're stuck with this hodgepodge of state-by-state treatments, and it's bad for everybody. It's bad for innovators who want to invest in this space. So that would be my priority, is just clear and transparent rules so that everyone knows where they can head in the future and that we can maintain competitiveness. Because to me, the underlying technology of cryptocurrencies is very, very high potential, and we should be investing in it.
But do you support sort of monetary freedom for people that want to move their money away from fiat currencies, get their money out of the banking system into cryptocurrencies? Because right now you have banks restricting payments to these platforms and so forth, and people feel like government regulations are essentially impeding in their desire to do that.
Well, right now, people who are investing in these currencies are finding a way to, to do so and make use of their investments. No, I don't think that you could impede it with regulation if you tried.
Hey, how's everybody doing today? If you guys didn't know already, that was Andrew Yang. He's running in the Democratic primary, and he gave this interview on Bloomberg where he said that cryptocurrencies, digital assets, they're basically unstoppable. For the most part, I do agree with him, but if the government wanted, they could definitely slow down the growth. If they decided to take an adversarial approach and they passed laws making Bitcoin illegal, crypto-based companies wouldn't be able to operate here, and it'd be very difficult to get institutional money to flow into crypto. But overall, I think it's a net positive. I mean, he does have a pretty large following. Bloomberg is a very big network, and that gives Andrew a very large platform. And whether it's from Andrew Yang or somebody else, comments like this sort of seed into people's subconscious. And when Bitcoin finally starts to make all-time highs again, more people will be aware, and consequently, I think they'll likely get involved. And Andrew Yang couldn't contain his enthusiasm for Bitcoin. In fact, after the interview with Bloomberg, he actually went to go evangelize Bitcoin in a different setting. These politicians, they'll do anything for your vote. With that out of the way, let's go ahead and dive into this week's crypto update. Given that I tend to talk a lot about lending platforms, let's review some of the explosive growth that we've been witnessing. Some of the data is out, and it looks like out of all the crypto-based companies, lending-based companies are doing very well. And for the most part, most people use price as a proxy for adoption. When people see the price of Bitcoin going up, they correlate that with adoption. But I think a more accurate barometer is the actual number of users. How many people out there hold Bitcoin, and how many people are continuing to accumulate? Lastly, this is not financial advice. I personally think that Ethereum could go on another run like it did in 2017, and I'll outline that thesis towards the end of the video. With that, let's go ahead and dive into this week's crypto update. What's the most profitable crypto sector? If you've been following me, it's going to be no surprise to you. It's lending. And this is part of the reason why I decided to buy Cell, Nexo. I even bought some BitTrue. I bought MCO token, Crow token. It's my personal opinion that this sector is just going to do better and better. Trading is too tedious. For most of us out there, the better strategy is to hodl and lend out some of that crypto to earn some passive income. And I've talked about the return multiplier effect. If you want to learn more about it, I suggest you watch one of my videos on Blockfi. Click the upper right hand corner of your screen. And even if you're not bullish on cryptocurrency or digital assets, you can always lend out your fiat-based stablecoin. And like I've been saying for a while, I think crypto-based lending platforms are going to be the gateway for most retail investors to get into actual crypto. I think they'll dip their toes in by lending out some of these fiat-based stablecoins. And once they see their peers making phenomenal gains with Bitcoin, Ethereum, and other cryptocurrencies, I think they'll convert some of their stablecoins into crypto. This platform only mentions 5 lending tokens and says that there's only 8 that exist. But if you follow me, you know there's more than just 8. But this article mentions 5 of them: Maker, Nexo, Ripple Credit Network, Aave, Cred. These lending sector tokens posted a median ROI of more than 75% over the past year and 15% in the past 90 days. In fact, I'm going to publish a video outlining all the tokens in the lending space and ones that I hold and I'm particularly very bullish on. If you're interested in seeing that video, make sure you subscribe, hit the notification bell. That way you'll be alerted when I publish that video. And even if you compare crypto-based lending to their legacy counterparts, crypto-based lending platforms are doing a lot better. The article states the following: a lukewarm U.S. economy is making big banks like JP Morgan Chase struggle to produce fast loan growth, even with interest rates close to historic lows. Yet in the white-hot cryptocurrency industry, lenders are burgeoning. And here it basically talks about how the Fed is cutting rates, and despite the low interest environment, the legacy banks are still struggling. But platforms like Blockfi, Celsius Network, they're doing great. And they think part of the reason, or a large part of the reason that they're doing so well, is because miners need cash. We will likely see miners leverage their existing balance sheet and treasury to source cash necessary to invest in their operation. According to the report, those unable to source cash will be stuck mining on old machines and might face serious profitability issues if the price of Bitcoin doesn't rise substantially. Most of the demand may be coming from Bitcoin miners, but I think a sizable amount of the demand is coming from retail investors. I published a video a little while back detailing my strategy of using a Bitcoin-based loan to diversify my portfolio. And if that's something that interests you, make sure you click the upper right-hand corner of your screen to access that video. I'm sure there's other crypto tards out there like me. They're going to use some of their digital assets and they're going to exercise a little bit of leverage. Now, I can't speak for all retail investors. I plan on taking full advantage of these services to maximize my gains in this upcoming bull run. So we're going to focus on 2 main charts here. If you look at this chart, the blue line represents the number of addresses and the green line represents the number of entities. And you can see here that they've been on a steady incline. Retail investors, we're used to just watching the price go up and down, just checking our Blockfolio constantly. But if you look at the research presented by Glassnode, it's clear that more and more people are buying Bitcoin, that you're seeing adoption. And I think this is a much more important metric long term. Sure, the price is going to oscillate on a day-to-day, month-to-month, year-to-year basis. But if you look at this chart here, you can see that there's steady and healthy growth. In fact, we're at that stage of a log graph where you see the growth just explode. The other graphic I really liked was this chart. It shows you the number of addresses holding more than 1,000 Bitcoin in blue, and the green line shows the number of whales holding more than 1,000 Bitcoin. And if you look here, back in 2016, before the halving, it looks like a lot of whales were buying in anticipation of the halving. And after they dumped, it looks like retail stepped in and basically sent the price pretty close to the moon. And it looks like these whales were pretty inactive for 2018, but heading into 2019, I'm assuming that some of the same whales are buying, but I also think there's other whales that are starting to participate as well. And if you look at the blue line, it's actually higher than it was back in 2016. So there's more addresses that are holding more than 1,000 Bitcoin. And I think most of these addresses are probably held with exchanges or companies that custody for multiple clients. So you can see we're in the accumulation phase. I think this whole movement here was just whales accumulating. Well, not only whales, I'm sure there's a lot of retail investors that have strong conviction in the long-term potential of Bitcoin, but you can see that these people are just accumulating. Now, there's no guarantee that it's going to play out the same way it did back in 2016, but it's pretty obvious that a lot of the Bitcoin supply is being removed off the market. So now think about it. You have large whales that are accumulating, so they're removing Bitcoin off the market. On top of that, we're headed into the halving where there's going to be less Bitcoin put into the circulating supply. This last sell-off that we had shook a lot of people. Now people are talking about us not even having the type of action we've had in the past post-halving. But I personally think that they're grossly underestimating supply and demand dynamics in a market. This article provides other graphics as well. If you guys are interested in checking those out on your own time, I'll make sure to include a link in the description. Ethereum miners ETH holdings near record highs. I've talked a lot about Ethereum in the context of DeFi. I mentioned in previous videos that ETH being locked into these protocols to provide liquidity is going to remove a lot of the Ethereum out of the circulating supply. So in other words, as DeFi becomes more popular and widely adopted, more ETH is going to be removed from the market. On top of that, with the next upgrade, they plan to implement staking. And once staking goes live, that's even more ETH that's going to be removed from the market. So for those reasons, I'm pretty optimistic about Ethereum's future, but it looks like miners also share that optimism. Notable, miner balances rose sharply from 1.54 million to 1.69 million in 4 months to October, even as prices halved from 366 to 170. That obviously means that these miners are expecting the price of Bitcoin to go up, so they rather hold on to their Ethereum than sell it today. And obviously miners are a source of selling pressure that makes it a lot easier for the price to go up. In part, that might explain some of the recent volatility. Even though we saw an increase in the number of miners holding on to their Ethereum, some of them had to capitulate, some of them had to sell to fund their operations. So from 1.69 million, we went down to 1.64 million in early November. And that does seem to correlate somewhat with the price action that we saw with Ethereum back in November and December. But as the price rose in January, it went up 36%. The miner balances rose back up to 1.69 million. I don't know about you guys, but all this data that I'm looking at is making me even more bullish. And if you followed me, you know I'm the biggest perma bull out there. I stayed bullish even through the bear cycle. But I think we're getting clear indication that the bottom is in and we're headed into the next bull cycle. And if I'm right, and you guys that follow me who've hodled throughout the bear market, we're finally going to be rewarded for our patience with one of Bitcoin's biggest bull runs in its history. And if you guys enjoyed this content, make sure you smack that like button. If you want to hear more, subscribe, click the notification bell. This is Crypto One Stop signing out. I'll talk to you folks next time. Bye.